Hi, my name is Elliott MLP. I'm the editor of Personal Finance as well as the Energy Strategist, and a really exciting news service that I co-edit with my colleague Roger Conrad called MLP PROfits. The website for that is www.mlpprofits.com if you'd like to find out more about that. Basically, this service takes a look at a very unique sector of the U.S. market, master limited partnerships. In addition to master limited partnerships, there are a couple of other closely related groups that are taxed in a similar manner, known as limited liability companies, or LLCs. Just to kind of highlight some of the benefits of this group, first of all, and this is a major benefit in my view, they don't pay any federal corporate tax. As most of the investors are well aware, the U.S. corporate tax rate is one of the highest in the developed world, even higher than a lot of the European countries that are seen as higher tax countries. These companies do not pay any corporate level tax because they're not corporations. Instead of paying corporate level tax, what they do is they pass through all of their cash flows, profits, and income to unit holders, basically shareholders, which would be us, in the form of distributions. And then each individual shareholder is responsible for paying taxes on the distributions they receive. But by eliminating that corporate tax, it does mean that they can pay out a lot more in terms of actual cash flow onto investors as distributions. Currently, your average MLP is yielding right around 9%. That would be the average for the Elliott MLP index, which is sort of the industry benchmark average index. So 9% in terms of yield. Some of the companies that we have in MLP PROfits, in particular in our more aggressive portfolios, are yielding upwards of 16%. We actually feel that not only are those dividends relatively secure, but you could actually see upside in terms of growth in their payout in coming quarters. Another benefit of the distributions you receive comes on your personal income tax return. Most MLPs report their earnings or their distributions on a Form K-1, which is a partnership form, not on a Form 1099, which is where you get most of your dividends paid. Unlike dividends, most of what you receive in distributions, or in many cases a large majority of what you receive, is taxed as what's known as return of capital by the IRS. These return of capital payments are not immediately taxable. Instead, they go towards reducing your cost basis in the MLP. For example, if you bought an MLP for $20 a unit, and over the course of a year you receive $2 in return of capital payments, it would reduce your cost basis in that master limited partnership to $18, but you would not be taxed immediately on those $2 in distributions. So it allows you to defer a great deal of your taxation until you actually go out and sell the master limited partnership. And there's some other unique tax advantages which you can check out in a free report that we have available on the sector and up on that website I mentioned, mlpprofits.com. Now, sort of getting into some of the benefits of it and giving a couple of names we really have liked. Most master limited partnerships are involved in the energy industry, but in many cases it's not the energy industry you probably think of when you hear the word energy or oil or natural gas. Most of them are not involved in actual oil or natural gas production or oil or natural gas refining and processing. Rather, they're involved in what's called the energy midstream business. Midstream refers to things like natural gas and oil pipelines, ships used to transport oil, liquefied natural gas, or refined products over the oceans or in coastal waters. In other words, gas and oil transport, storage, all of these types of assets would be midstream assets rather than upstream, which is actual production, and downstream, which would be mainly refining. The thing to remember about the midstream is it's very asset and capital intensive. Building a new pipeline costs billions of dollars in some cases. However, once you build it, the revenues you receive from it are very reliable, very dependable, and very steady, mainly because you book long-term contracts with your customers which guarantee you a set rate or a rate that escalates over time alongside inflation. So very, very stable return on assets, and that means very, very stable cash flows for the base business that these companies are involved in. Those stable cash flows in turn allow them to transfer to you in the form of distributions, those enormous income payouts. Just a couple of companies out there that we've been focusing on a lot lately, and you can see up on that MLP PROfits website. One would be Enterprise Products Partners. If you're a subscriber to Personal Finance, you also recognize this one. This company owns mainly natural gas midstream businesses. That would be natural gas pipelines, natural gas processing facilities that take raw natural gas and process it into more usable products. And they also own some storage facilities and some offshore platforms that are used to collect natural gas and oil production from deep water wells. They're currently in the process of acquiring another company known as TEPCO, and the symbol there was TPP, which has some very similar assets on the natural gas side, but also has some oil-related assets, oil-related pipelines, oil-related storage and terminal facilities, which should complement Enterprise's business very, very well. Very, very similar assets, but it also helps to diversify Enterprise away from a strict natural gas focus. A little bit more on the aggressive side of things, Enterprise actually yields around 8 to 9% right now. On the more aggressive side, if you're looking for a yield sort of closer to 15%, check out Navios Maritime Partners. Symbol is NMM. This company owns dry bulk ships. These things are used to transport everything from grain to iron ore to coal over the oceans, for example, from, say, Australia to China. Very volatile business. However, Navios Maritime has booked long-term contracts with many of their customers, which mean they are pretty much guaranteed a rate no matter what spot rates for dry bulk shipping do. That's a summary of two of our favorites right now. Check out www.mlpprofits.com for more on some of our other favorites and some of the other areas we're looking at right now.